Hey guys, Seeney here, and welcome to another episode on the Australian Wealth channel. And in this episode, I'm giving you guys a net worth update and how I've been tracking over the last 6 to 12 months. So please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. So in this video, we are doing a net worth update. And the reason that I like to do these is for transparency reasons, because I think it's really important to be able to see how net worth can grow over time. So obviously, you know, this isn't a brag. I find it really helpful when people have actually displayed what their net worth is, how it has grown over time, what they're doing to grow their net worth. I think that's been absolutely valuable, totally valuable information that has helped me to grow my own net worth. So, you know, that is the goal of this. That's why I'm sharing it. It's been a little while since I've done one of these videos, but I thought it was time. I have a little bit of time over here in Fiji, so I can share how things are tracking. So of course, net worth is a combination of all the assets that you own, everything that you own minus everything that you owe, like liabilities such as car loans, home loans, things like that, versus the value of everything that you own. So before we get started, one of the most important things in building my net worth has absolutely been income. It's been very important to have a really strong income driver to help fund those investments and get serviceability for real estate, things like that. So it's very important to be always trying to bump up that income, even a little bit, because it affects serviceability a lot. And it might mean the difference between being able to get that next property and having to spend a little bit more time paying down that debt first. So without further ado, let's get into it. I'm gonna give you guys a bit of a breakdown of my real estate portfolio and everything that's going on there. So to start with, I'm gonna start with the primary place of residence that I live in. So this is the home. We bought this in 2019 at literally the perfect time, and this wasn't intentional at all. I was just looking for a place to live with my missus. And we bought that house in Sydney for $819,000. And over time, those of course grown in value drastically to the point where this house has been recently bank valued for $1.25 million. So it's been a huge, huge increase. So I can't speak highly enough of home ownership. A lot of people talk about buying your own home as like a total waste or whatever, because, you know, it's not an investment, but it couldn't be further from the truth for me. You know, it's generated so much extra equity over time, which I've then been able to pull out and go and invest in other investment properties. So, you know, I can't speak highly enough of home ownership. It's been fantastic. So that's the first one, $1.25 million. So the next one is our rental property up in Redland Bay in that region. So we bought this at, I think it was $540,000. And that was just probably 6 months after we bought our primary place of residence. Now, that has now increased to $730,000 to $750,000, which is a pretty significant increase. The rental return on that is $580 a week. So it's pretty good return. And that the demand for that is just continuing to increase massively, especially up in Queensland. So that's that one. The next one is our rental property in Adelaide. We picked this one up not too long ago, but in the time it took to build this property through to when it was completed and to now, it has also increased in value quite significantly. We make sure that we're working with buyers agents to ascertain areas that are going to grow really quickly, and we've seen very good results from doing that. So we bought this for $407,000. This is now worth roughly $470,000 to $490,000 in a very short space of time, only about a year and a bit. So it's been tremendous growth over there in Adelaide. And the rental return on that, we initially thought it was going to be $370,000, but by the time it got built and was complete, that was more like $480,000, because that's what it's rented for. So fantastic returns there, which is great. So the next one is a property that we have at Springfield Lake. So we bought this for $470,000. Properties in the area have been selling for $639,000 now, which is a huge increase again. And the rental return on this is $480 a week. So all pretty positive returns. At the moment, I believe these properties are about cash flow neutral. A couple of years ago, I said it was really important to be buying cash flow positive properties. A lot of people negative gear to really get those areas where there might be outsized capital growth. As we can see, over the last couple of years, interest rates have gone up drastically. So people that were negatively geared are even more negatively geared now. And it can be very, very expensive to do that, especially when the property is declining in value, which some have over the last year or so. So I've said that positive gearing is really important to get those good rental returns along with capital growth. Both of those things are important, and that has proved very effectively over the last year or so, because it means that I haven't actually had to continue to pay to hold these properties. It's the rental returns, even knowing interest rates have gone up so much, that are continuing to fund this. So the yearly income of these properties is just over $80,000, which is pretty good. The current portfolio is worth roughly $3.25 million, depending on what the day looks like or what the buyer looks like, but it's roughly around that figure. So I'm pretty happy with that figure so far. We're actually looking at buying a commercial property next to grow that portfolio even further. So we'll see how that goes. Obviously comes down to serviceability. So in terms of other assets like car and contents and things like that, it's roughly around $100,000. The stock portfolio has been absolutely decimated because I use a lot of my stock investing to go for high growth companies that are a lot more speculative. A lot of my long-term growing money is in real estate. So I treat my stocks a lot more speculatively. I don't really talk about them anymore because, it's not really in line with what ASIC wants going out into the public, but the stock portfolio is roughly $50,000 at the moment. Most of the money's in real estate. So on this list for the first time, I've also included my business. My business is now a fully fledged company, which is running really effectively. I could take a step back and put someone in there and the company will continue to run. So in the same way that people like, say, Elon Musk or Jeff Bezos, not saying I'm anything like them, their net worth also comes from the value of their business. So I think it's important to include mine at a pretty low kind of level. I think that's important to include because it is an asset, tangible. Like someone could potentially invest in the company and we could get a return out of that. So I've based this on a 4 to 6 multiple at about 20% growth. My business is growing about 20% at the moment. So this is based on EBITDA. So earnings before tax, depreciation, and all that kind of thing. So based on that and how much money is coming through the door, I value the business at about $1.25 million. So, it could be anywhere between 1 million to 1.25, but I wouldn't take anything less if we had investors for 1.25 million. So if we tie up all these things, look at the value of the property, value of the business that I own, other assets that I hold, it brings my net worth to a value of 2.6 million, which is quite a big increase from last time, but the value of my property portfolio has grown. We're earning a lot more money, which is fantastic. And of course, I am including the value of the business. So if you take that out, it's about 1.4 million just separately, but I think it is important to include it. For that reason. So just for full transparency. So I hope this is helpful. You can go back and look at some of my other net worth videos and see how this has grown over time. I've been tracking this a long time since I was under sub 1 million, and you'll see how wealth has increased in my portfolio over time quite dramatically, and it's continuing to pick up. The first million was definitely very, very challenging, but since then it's become I wouldn't say it's any easier, but it's growing much, much faster now, which is fantastic. So the most important thing is getting that asset base. Once you've got an asset base, then you can kind of relax a bit more and enjoy a little bit more of your money. So I worked really hard through my 20s and was lucky enough to have a lot of success and provide some value to a lot of different industries, and that really helped to grow my net worth. So I hope you guys found this interesting. Please make sure you like and subscribe to the channel. It really helps to get these videos out. If you have any other ideas for videos that you'd love to see from the channel, please let me know. I'd love to hear more about them, and I'll probably do an update at some stage over the next 6 to 12 months, and hopefully at that point we're getting close to crossing the $3 million mark, which is probably what I would consider rich in Australia. So thank you guys so much for watching. My name's Seeney. See you later.